Hey, how's it going? It's Rocky. I am having technical difficulties because obviously this is not something I've done before. I tried to do a test run last night, but the scheduled one that I had at 1:15 p.m. right when the US market closed didn't actually quite work out, but I'm gonna try again here. Hopefully be more smoother tomorrow. So my goal for this is just a quick diary, I guess, per se, of the trades that I took for today. Basically, if we zoom in to the screen here, it's currently Monday, February 13th. It's about 1:24 p.m. in the Pacific Coast. The US market has closed for the past 24 minutes now. And essentially, I just wanted to do a analysis of the trades that I've done for the day. And if you follow my social media, basically on my YouTube channel, Instagram as well, I post this. I go through how I did for the day. So as you all know, tomorrow is very important. CPI data is coming out tomorrow. And essentially how we did was we were, very thankful that we got a profit of $3,572.86 for the day. And basically the breakdown of that is, pardon me for clicking on that. So basically the breakdown of that is the YM is what I'm using to hedge my account. So essentially for that one, I messed up a little. I'll go through my trades for the day, lost $320, but very thankful for my swing trade. So this is the MYM that I have long. I'm just leaving alone until the expiration on March 15th. So that one got us a profit of $3,900. So here again are the charts. I'm gonna go through the three trades that I did today. One is still open, so if I basically zoom into the active trader here, you can see that I do have an existing short open with 4 contracts. PL open on that is $700. That was my last trade of the day. I'll go through it exactly what happened there. So the reason I'm also doing just a live trade recap is I never do want to do an actual live stream because I feel like that could be a lot of liabilities for a copy and paste trade there. All I really want to do is just go through the trades that I did. Basically with how the market went up so quickly here, you can see this curve. I wanted to hedge it, right? Because there's too many times with this volatile market where it's up to 300 points and it gives it all up. So I sort of found a way to protect myself there. And if we look on the tick-based chart, this is where I saw a bit more signs of a slowdown. But if we looked at my indicators on the tick base, there's no signs in here that said I should have shorted. It was more of like again, it was a hedge protection that I did. So basically on this trade here, it was 3 contracts. Our average was 34,213. So I'm gonna just put the calculator here just to go through that. So our first trade, 34,213, and then we covered at 34,187. And since we traded with 3 E-mini, where 1 contract for 1 point is 5 points, so 3 is 15. You multiply it by 15. So that one trade right here actually got us $390. So that was a good start for the day. And then next I'm gonna go through the second trade that I did for the day, and this one I left a lot on the table, but it's okay. I'm again gonna show you the time-based chart first to show you what I was seeing on this second trade. On the second trade, it was hitting a bit of resistance on the top, and that's why I shorted here with 1 contract followed by another one. So with this one, we had a average of 34,235, and if we look at the indicators, you can see that it did cross over. Stochastic RSI was heading to oversold, which is when I like to short. So basically with that 3 contracts, I'm gonna show you what I was seeing on the tick-based chart on the indicator. Same thing, it's about to cross over here. Stochastic RSI was heading on to the oversold side. So basically with this trade, 2 contracts, average was 34,235. So I'll bring the calculator back here. So average 34,235, and then recovered at 34,216. So 19 points only, times basically 10 on this one because it's just two contracts. That was just $190 on this one trade. So again, I was hedging to try to protect myself. But you can see here, it actually dropped to about 34,155 or so. So left about 60 points, on the table, but it's okay. That 60 points would have given me, $600, but that's all right. The one that I want to talk about is this mistake that I did towards the end of the US market closing here. And as you can see, this occurred at 12:50. I made an error similar to this last Friday. If you check out my content, I did one on a week analysis for the week. Basically, I'm trying to figure out how to trade the last 10 minutes. I mean, I know I don't have to, but I sort of do want to master that last 10 minutes because a lot can be made in that last 10 minutes. So with this trade, you can see that, the crossover occurred. That's when we were oversold side on the tick base side. So let me actually show you the indicator. So you're on the oversold side here. It crossed over. But if we look at the time base chart for this same exact trade, basically, I was following this one candle at 12:50. I know it's a dangerous candle to follow because there's really no confirmation to say that it was a bearish move. And if you look at the indicators for that time base, you can see that, there was no crossover. We were not headed to the oversold side. So it was a very bad entry on my part. And basically, it punished me. It punished me in that last 5-minute candle. And then right now, you can see it's still going on. But it's okay. Essentially, for the hedge account, I was up at least $500. But now I gave up really $100. It's still live, right? But if you can tell from what I posted, at that instance at 1:02 p.m., it was at negative $320. But there's a chance that this will come back, and that's with the futures market. I know I like to keep my hedge intraday by itself, but I'm curious how the Asian market is going to react. So yeah, check it out again later in the evening. But anyway, that's some content that I'm trying to start to see if there's some interest at all when I go through some of these to see if it's something at all that is helpful for people.